Ito na ata yun. Okay, let's start. Joke lang. Ay, da. Okay. Guys. Handa na mo kayo. Ah, okay, we'll start. But I would just like to preface with we since it's accounting, we don't have that many resources. Like walang subjects. Amen. So I don't know if we'll have a lot to be able to a lot of material to go through right now. I'm honestly going to use some of the stuff that our instructor gave us. So if you guys have like um any questions na lang, the specific things you want to discuss, please do bring up since we do not have enough material. And wait lang. Why am I so technically difficult? Hold on. Is it audible naman? Or am I laggy? Kaya mag-ano ng screen.
It's audible naman.
Okay.
Audible naman.
But wait, I think I need to reconnect because the screen share is not sharing. And I just need to complain. I think it should work. Hmm, hold on. Go live. Hello. So I have a nice little calculator here. Kita ba? I'm not sure if I'm going to use that much. Hinanap ko lang sa internet. So I think start off, I will just I will use the skills checklist na gawa ni Trey. Thank you, Trey. As like a guide for our flow for tonight. So let's just get right into it. So sinabi bit, who is here? Are we all Abe or not? I think Daphne is not Abe. Is she? Basta. So we're only gonna do lectures 5 and 6, liabilities and equity, since yun yung topics in common of the two classes. So since they are both parang on the right side of the aloe again, the first thing to do is differentiate why are liabilities different from equity. And so we have this table here. You can read on your own. If you have any questions about any of the entries there, you can ask na lang. But I think it all boils down to like the main difference is if yung mga equity, sila yung parang invested talaga in the company. But like for liabilities, you just owe them money. That's the main difference. In equity, they care about what happens to the company, basically. I mean, liability people who have who provide liabilities still care about what happens because you know if a company goes bankrupt, they cannot pay back their liabilities. Pero ayun yung main difference. And then people who provide liabilities through like utang, they just earn by imposing interest on yung utang nila. Tas yung equity, they get dividends or like basically a return on their investment in the company. Ay, alam niyo naman yun. Very basic. Basic. So, on to the difference, like the two types of liabilities. There's current liabilities and non-current liabilities. So current liabilities are liabilities that you need to pay within 1 year or one operating cycle. But I think for accounting one, lahat naman ng operating cycle is 1 year. So just use 1 year as your measure. Okay. Then your accounts payable is one of the kinds of current liabilities, and we don't need to discuss that one because that was part of your first exam. I think everyone knows what that is. And then we have notes payable. Usually comes with interest. Oh my god, I'm just reading the whole checklist, guys. And then hold on. Oh yeah, since notes payable is usually it notes payable and bonds payable. I'm not sure. I think they are kind of medyo one and the same. Usually they are long term utang. So the current part of it is just the part of it that you need to pay within 1 year. So basic lang yun, guys. Guys, basic lang talaga accounting. Oh. Okay. Uh, hold on. Okay, and I'll go through the entire. Ah, sorry, guys. Hindi ko pa napag-isipan how I will do this. And then, sige, mag-sample na tayo, guys. For notes payable. Where is my other tab? Not payable. Not payable. Okay, ito yung promissory note. I think this is the more simple. This is the simpler type of liability. I'm not sure if strictly yung difference ng bond and note is the bond is the one where we apply yung present value and stuff. But so for this example of promissory note galing sa quiz ni Sir Abe, Ginza Company signed a 20 million peso 5-year 8% promissory note requiring a payment of 4 million plus interest every June 30. Ginza Company closes its books every December 31, 2024. So, pang 8%, this is yearly. Basic din yun, alam nyo na yan. That when they give like a rate without specifying how often, it's annual rate. Then the first sub question here is, what is the amount of current liabilities to be reported on December 31, 2024? So I think if you want, we can illustrate this. And so we have the total liability. Ah. So we start with 20 mil. And then on December 31, 2024, some of these are going to be current and some of them are going to be non-current. So the first thing that we know for sure is the current liability by that time is the 4 million that we're going to have to pay on the next June 30. So we have our 4 million. Ay, 4 million. And then we also have our plus the interest accrued. So that's just going to be 20. Wow, I love this calculator. 20 million, 1, 2, 3, 4, 5, 6 times 0.08. But since the the note was only signed on July 1, ah, and then this is December 31, so that's July, August, September, October, November, December. That's 6 months out of 12. So we do times 6 over 12. And then we have the interest of 800,000. And then the part where I actually got wrong here is, even though technically we know naman na in our calendar year, this is like December, and then all the way until next June 30. We know that there's another 6 months here. So it can be confusing. Well, I guess I'm the only one who got confused. na we know that in 1 year, we're actually going to be paying the rest of the 8% and not just half of it. Even though we know now we're going to be paying this within 1 year, it's not counted as a current liability because it's not yet accrued. So for it to be a liability, kasi, it has to be as a result of past actions or something. And even though like signing the note is a past action, hindi pa nga siya accrued. So I guess a good way of thinking it is liability is a credit, right? By this time in December 31, wala pang debit to go with this liability, yung extra 6 months. Because since we're doing accrual basis, yung debited pa lang is half of the liability expense, but not the entire 12 months, not the entire year from signing until the next June 30. So I guess let's open this pala. It's 4,800,000. And I guess another question we can ask to test our skills is, what would be the current liabilities on, say, November 30? So pag November 30, this 4 million stays constant because this is the liability that we've always had. saying principal liability that became current because we know we have to pay this 4 million next year. But since November 30, it's 1 year before December. Let's just change this thing to 5/12. Oh, so if that question was November 30, the answer would be tama ba yan? Ay, joke lang. This is just the interest. So let's add the 4 million. Okay. The answer would be 4,666,666. Um, please, I hope none of you are unsettled by that kind of number. But yeah, 4,666,667 if it was November 30. Tapos, kapag, ano rin, if the question was current liabilities on July 1, your answer is 4 million. Wow, ang gulo na ng paper, guys. I'm so sorry. Because the interest hasn't been accrued yet, but we know na next year, on June 30, we're going to be paying 4 million. Yun lang. Wow, I spent so much time on one sub item. Okay, what is the amount of total liabilities to be reported on December 31, 2024? So I think we can use this illustration that I started on. So we split this original 20 million into 4 million and something else. And obviously 20 million minus 4 million is 16 million. Or this is the principal left over from the principal left over na we're not going to be paying within a year. But since we're also including this interest accrued, our total liabilities is 4 million plus 16 million plus 800,000. It's just 20,800,000. Yeah. And then, and then if we ask a different question, if it's November 30, it's going to be 20,666,667. If it's July 1, it's just the 20 million. Okay, letter C. What is the amount of non-current liabilities to be reported on December 31, 2025? Ay, nakita ko na. 12 million. Okay, let's talk about why it's 12 million. So, non-current liabilities. Uh, Basically, in this case, our non-current liabilities will only ever be the principal or the whatever is left of it. So, by December 31, 2025, that's already, how many is that? So by 2024, okay. By 2025 kasi, in 2026, we're going to pay off an additional 4 million. So that, including the 4 million we paid in 2025, maging 12 million na lang siya, yung original principal. And then just to elaborate on why the interest won't be part of the non-current liabilities, well, it's because we're gonna pay it within a year. And yes. Yeah. Since it's stated here na the interest is going to be paid every June 30, we know na any interest accrued will not be paid later than a year. Gets ba? Basta it's not possible for interest to be part of the non-current kasi when it's accrued, it will also be paid within a year of that accrual. Accruement. Next, what's the amount of interest to be paid on June 30, 2026? So, in this case kasi, the interest is based on what the current principal is. So, to ask what amount of interest to be paid on June 30, 2026, we have to know first also how much principal there still is on June 30, 2026. So, by then, let's see, 2025. Okay. So there's going to be, check this. Okay, tama. So since we discussed kanina na by December 2025, there's non-current liabilities of 12 million because we're going to pay 4 million on June 30, 2026. But that 4 million is still part of our principal that we're using to calculate the interest. So our principal is 16 million. Interest rate is 8%. Let's just type that in. 16, 1, 2, 3, 4, 5, 6 times 0.08. So the answer will just be 12,800,000. Okay. So let's go back to the checklist first. So that was notes payable, I believe. Okay. Hold on. My Apple Pen is not Apple Pen. There we go. So just take note then of the format for journal entries. Um, if you have any trouble with this, bring it up na lang. But I think medyo gamay naman na natin yung the entries themselves, like knowing what is a credit and what is a debit. The trouble here is now just distinguishing when when it is recorded and how much of it is recorded. Okay. Third in the checklist for current liabilities is unearned revenues, but I think we already know that. And then next is contingent liabilities. So these are potential liability that may become an actual liability in the future. So this is more like damage control or ano. So kaya contingent. It's related to like contingency plans. So trying just in case fund natin. And then the most common example for this is warranties. And yeah, also just remember that they will only be recorded if they are probable and reasonably estimated. Of course, you need both of these because if it's not reasonably estimated, then like, what are you going to record? Because you still need to put a number there. Okay. And then let's go back up to our example on warranty. So a new product introduced by Wilkinson Promotions carries a 2-year warranty against defects. The estimated warranty costs related to present sales are as follows. 3% for the year of sale and 5% for the year after sale. Sales and actual warranty expenditures for the years ended December 31, 2021 and 2022 are as follows. Okay. So the first question is, how much is the warranty expense to be recorded by the company in 2022? So if you're like me and you hadn't done this in a while, you might think na, ayun na siya. This is the 70,000. I mean, that's the expenditure, 70,000. But no, it is not. Because the way that we treat in contingent liabilities is right off the bat, they are listed as an expense. Because again, if we want to list it as a liability, that's a credit, it needs to have a friend, a debit. So in this case, it's considered a warranty expense, even if wala pang nag-claim. So in a sense, we're just setting aside a certain amount of money in anticipation na may mag-claim ng warranty. So for this, in 2022, we just look at this 1 million, and then we look at this. So we know na of the 1 million pesos in sales, 3% of that needs to be set aside for warranties that will be claimed within the year, and 5% should be set aside for warranties claimed the year after. It's also no, never mind. I was gonna say something, but I think di naman necessary to discuss. Sasabihin ko na lang. It's possible then they might have set aside funds for like 2 years after sale, but that won't be recorded na. I think kasi those will ano, wag na lang kasi they won't do that to us. But I was gonna say they probably won't be listed down because we have that thing about liabilities being only within the year, within a year, to be paid within a year. Yan. Kaya the range or the what's it called? Around coverage that we're going to record is within the year or within another year. Huh? Within the year or 1 year after sale, ganun. Ay, edi within the year. Ah, okay. Sorry, this is calendar year kasi. That's why I'm getting confused. Anyway, let's proceed. I'm so sorry about my attention span. So, yung gagawin lang talaga, guys. Madali lang yan. 1 million times 8%. So, this is just the amount of sales that we're going to set aside in case may mag-claim ng warranty. So, that's 80,000. Hooray! Then you might be thinking, um, how come itong 800,000? Since 2021 is the year before, how come 800,000 times 5%, because the year after, isn't part of our warranty expenses? Because this is this 800,000 plus times 5% is a warranty expense of 2021. Even though the expectation is that the warranty will be claimed in the next year, the expense itself was recorded that year. Wow. The next, how much is the remaining warranty liability to be reported as of December 31, 2022? Assume the 2021 warranties have not expired. So for this one, just remember na kasi expenses are temporary account. Basically, expenses from 2021 will have been closed out, but the liabilities na kapartner niya sa debit credit are still going to be sticking around even in the next year. So this is just 800,000. Actually, I'm going to type it na lang sa calculator. So first, let's list down how many are all of our expenses from 2021, or all of our warranty expenses for 2021 and 2022, because that is the same as the liabilities that were credited to warranty payable on 2021 and 2022. 100,000 times 8% plus 1 million, 1, 2, 3, 4, 5, 6 times 8%. And then, since it's asking remaining warranty liability, you have to know that means the original liabilities were already deducted from. That's because we have these actual warranty expenditures. So, what's gonna happen there is madedebit yung warranty payable and then a credit. Honestly, I don't know ano yung maka-credit dito. Does anyone know? Who wants to volunteer?
I'm gonna Google it. I'll tell you later.
So basically, from this 20,000 and 70,000
Wait, sorry. Ano ata? Cash lang ata, di ba?
cash.
Hindi ba?
Yeah,
Yeah.
kasi the cash wasn't originally debited. I credited. So, dito ka pala here. Cash for 90,000. So, ayun lang. Let's just remove that 90,000. Answer 54,000. Okay. Once we're done with warranties, let's go back to our house that Trey built. Okay. So we're now on to, oh my god. I am maganda na naman. I keep pressing the microphone button. Okay. Non-current liabilities, which are obligations not within the period. So we listed under here bonds. So bonds are similar to notes payable. So when someone buys a bond from you, or if you buy a bond, you're lending money. Nakalist pala dyan. The one who lent the bond promises to pay the face value of the bond upon maturity. So there's a bunch of terms here. Those are technical, or like kind of memorize. Okay. So, but the real hard part about bonds is this whole thing about present value. So the whole thing with present value is because some people will be offering bonds at a different rate than the market rate or the rate that the investor wants, the rate of return. Ganon. So here we have this list na if the coupon rate is less than the market rate, there will be a discount. If it's equal, it's just the same. If the coupon rate is more than the market rate, there will be a premium. Yes, yes, okay. Sorry, I was just making sure that was correct. I mean, I have full faith in Trey. It's very correct. Thank you, Trey. Um, so basically, sana kasi naman yung reasoning, but I guess I'll go over it. So for if the coupon rate kasi is less than the market rate, that means mm, for every peso that the investor invests, they will get a lesser return than they want. Allegedly, that's only if the investor pays the face value of the bond. But if they pay less than the face value, but the the provider, the issuer of the bond, still pays the same amount of like interest, like following the face value and the stated rate. When they get a discount, they will get the return that they want. So that's why they decided to make life complicated for us. So there are two different formulas for present value of a single sum. There's this one and this one. So yung present value of a single sum, this one is going to apply to like the principal or basically the face value of the bond. Then this one, interest payments. Obviously, this one is for our interest payments. And then if you want the present value of the entire bond, you have to add these together. The present value of the principal or the face value kinda of the bond and the present value of the interest payments that will come with it. Whew. So God, I hate this part. But I don't know. Let's go back. So this is the item on present value and bonds and stuff sa quiz ni Sir A. So on January 1, 2022, Tokyo Furniture Company issued 700,000 of 10% bonds to yield 8%. Interest is payable semi-annually on June 30 and December 31. Oh yeah, this is a correction. I corrected it na lang. So like, yeah, June 30 and December 31. The bonds mature in 10 years. Round off answers to the nearest peso. So just go over the things and absorb the information first. This is our face value. 10% bonds, meaning this is the stated rate. Then yield 8% means this is the effective rate. So when they say yield rate 8%, this is, I'll just reiterate what I said kanina. Basically, when someone actually invests, like the real amount of money that they invest, dapat they yield 8% back. Even if the bond itself is technically a 10% bond. So, just colored. The bonds mature in 10 years. So this is important because our formulas always make use of the number of payment periods. And then since this is June 30 and December 31, yeah, you can see what it says here. It's semi-annual. So payment periods is actually 10 times 2. We have 20 and equals 20 yun, at the start. So the first question is simple, I guess. The carrying value of the bond upon issuance is what? So we just use our formulas here. So 700, 1, 2, 3, 700,000. This is the face value times 1 over 1 plus, oh yeah, sorry, didn't say. If it's semi-annual pala, since the rates are actually annual, we have to divide them first. So our semi-annual stated rate is 5%. Our semi-annual effective rate is 4%. Okay. So for this 700,000, um, we're getting the present value of the bond, the principal, the face value. I'm not sure what term to use. Let's use this one, 0.04 to the power of 20. Oops, 20. So in this case, we use the effective rate kasi bakit nga ba? Okay. The whole concept kasi of the present value and stuff is it acts as if the bond itself is a compounding interest that it doesn't take away from the principal until well ba? The present value formulas act as if the entire bond is paid off upon maturity. So it uses the effective effective rate for this part. And then here, this is the installment payment, 700,000 times 0.05. Here we use 5% because in the formula it's P, which is the payments. So since in actuality the company will just be paying the face value and the stated rate, it's just we use 5% here. But when we're trying to get the true value, like the present value, and the other computations, since what we're trying to do, we use the effective rate. Kasi yun talaga yung yield na hinahanap natin. Wow. 0.04 to the power of negative 20 all over 0.04. Sana tama, guys. Okay. Yun. So you get 795,132. Then interest expense to be recognized for the year 2022 is what? So something to keep in mind to make sure na just to something to verify your answers, or it can also be the basis of your answers, is interest expense is gonna be interest expense in a period gonna be yung interest paid. When we say paid, we mean yung cash not transferred talaga, not the amortization, just the actual payment, and then plus the amortization. So amortization, if di nyo forgets what it is for at all, um, basically yung point niya is since the 5%, since the effective rate and the stated rate differ, and what do you call it? Hey, sorry. Since the present value differs from the face value of the bond, amortizing, amortizing the amortizing the bond over time slowly offsets the difference between that. So basically, um, when you're done with amortization or by the maturity, oh my god, ba't ako tinatawag? Hold on. Okay, I'm so back. Um, so by the end of yung amortization, basically dapat yung carrying value is the same as the face value of the bond. That's our goal here. So after all that yapping, gagawin ko na yung solution. Okay, so interest expense. So we know our interest paid already for 2022 in our corrected scenario, June 30, December 31. It's gonna be first the 700,000 times 10%. Yes, 10%. And then plus our amortization. So A quick way to get your amortization for a certain period of time would be, since yung amortization nga is, the goal is to make the present value equal to the face value. Yung amortized, the amount amortized is actually just the difference in present value in that in time interval. So let's do that. First, let's find the amortization. We already know na at upon issuance it's 795 132. And then for the year 2022, so basically June 30, 2022 and December 31, 2022 have passed. So that means our next state is what you call it. We can compute for the present value after those two payments, meaning there are only 20 minus 2 payment periods left. So that's 700, 1, 2, 3. And so I'm just re-inputting the entire formula for present value 0.04 are off. But this time we know that there's only 18 periods left. Plus 700, 1, 2, 3, times 0.05 times 1 minus 1 plus 0.04 power of negative 18 all over 0.04. So this is the the amount amortized. In other words, the face value, the present value of the bond went down by 6,517. And then, so let's just add that to the interest we paid. So 1, 2, 3 minus 0.10 plus. So when we add the amortization to the interest we paid, we're going to get 63,483. Okay, yes, that's the answer. 63,483. Don't mind the X mark kasi nga I answered a different way. Kasi dati iba yung given. But apparently that was a mistake. That's a correction. Okay. Okay. Where was I? Okay, so you'll notice pala na interest expense is 63,483, but that's less than the amount of money that we transferred here. The 700,000 times 10%. That's because since the stated rate was greater than the effective rate, this bond was actually sold on a premium. Actually, you can also see it here. Since the carrying value on issuance was higher than the face value, it was issued at the premium. So basically, the reason this is lower is because it's basically deducted by the higher. It was already offset from the this 700,000 times 10% was already offset by the fact that they paid more money from the start. Okay, next. The premium or discount to be reported on December 31, 2023 is what? So the premium or discount, since amortization equalizes the present value to the face value, you can also say that it actually depletes the premium or the discount over time. So what you just want to find out is what is the present value at December 31, 2023, and then get the difference of that from the face value. And then that's the premium or discount at that time. So let's find out December 31, 2023. That's already, so we have a June 30, December 31, 2022, 2022, 2023, 2023. So we know na 4 payment periods have passed. So let's just calculate the present value at n equals 20 minus 4, which is 16. 700, 1, 2, 3 times 0.0. Times 1 over 1 plus 0.04 to the power of 16 plus 700. 1, 2, 3 times 0.05 times 1 minus 1 plus 0.04 negative 16 over 0.04. So what you yeah, okay. What you're gonna get is 781,566. And then just get the difference of that from 700,000, which is the face value. You get 81,566 premium. Then next, the interest paid to bondholder for the year 2025 is what? So we discussed kanina, when we say interest paid, that's the literal money transferred. We don't care about like the present value and stuff. So this one is easy. Interest paid to bondholder for the year 2025 is basically 10% of 700,000, or do you want to be particular, two payments of 5% of 700,000, which is 70,000. Then the carrying value of the bond on December 31 or upon maturity is what we mentioned earlier. Upon maturity, dapat after all that amortization that we did, the carrying bond value is the same as the face value na. That's so awesome, guys. Who else thinks it's awesome? Um, so that's it for liabilities. Um, you guys want to take a break before we move on to equity? Because I think we don't have that much to cover naman talaga. So we have a lot of time. Break, 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 break. Yeah. Okay. Let's take a 5 minute break. I'll be back at 7:52. Hello. Oh, it disconnected. Oh no. Oh no. My iPad. Oh man. What I do? Um, oh, Jerome Estrella. I copy pasted the types of shares and notes without knowing what they mean by explain. Ito. Okay. Hold on. I'll discuss it na lang when we get there. If my iPad connects. Please. 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 Just go Lord. No. Okay. We're back. Welcome to another episode. Um, so owner's equity. Uh yeah. So in owner's equity, it will depend on the kind of company or entity na the thingy is, the place is. So there's partnerships and there's corporations. There's also sole proprietorships. But sole proprietorships are like from an accounting point of view, medyo the same lang as partnerships. Uh so yeah, let's I want to list like the differences, but it's just gonna seem like I'm reading off the thing. Science. So one of the main distinct thingies is pag corporation. It's a distinct. It's its own economic entity. So another perk of that for people who start corporation is there is limited liability. So like if the company goes in debt, they can't be the people themselves can't be asked for money from their personal funds. Uh, okay, the rest you can just read. Okay, so ito. Oh, Daphne explained also. Uh, yes. Uh, huh. Wait, parang iba yung pagkakaintindi. I don't know if it might be like a section difference thing, but as far as I know, the oh yeah, it's literally here. So share capital, share secured to be subscribed and to be paid by stakeholders like money, property, or service. So just ordinary shares and where is it? Share premium. You can see it's here in equity, yung ordinary shares. Yeah. Additional paid in capital is another term for share premium. So actually, ordinary shares and share premium actually refer to like a portion of the funds used to buy stocks. They're not. Oh my god, madam. They're not technically different kinds of stock. Uh, hold on. Okay, I guess I can't do anything about that. So the ones that are actually different kinds of stock here are par value shares, I think. No par value shares and treasury stock. And there's also nasa baba rin naman siya ata yung preferred as a name. Hello. Here. Ordinary and preference shares. I guess yun yung sinasabi ni Daphne na ordinary shares. But in terms of like the account sa equity, yung ordinary shares is um basically the par value times the number of shares outstanding. Ganun ba yun? Something like that. The number of shares issued, perhaps, rather. Um, whew. Okay. So par value shares basically they have a prescribed value on their own. Uh, the no par value shares is yeah, people can decide how much they are worth. I think when it comes down to equity, a lot of the distinction boils down to how much do the investors trust you? How much faith do they have in you? Ganun. Because par value shares, let's say the company is like gone to poo poo. So since if it's in the slides it says the par value of a share or the ordinary shares. Ay, sorry, it's here for the ordinary shares is the minimum amount of paid in capital that must remain in the entity to protect corporate creditors. Since the ordinary shares comes from the par value paid for stocks, uh, basically when you have par value shares, people who buy those shares have a minimum na like if they want out of the company, they are guaranteed at least that amount of money, the ordinary shares that they paid for, the par value that they paid for the stocks. And then the share premium is just that when they buy into your company, they're paying they're paying more than the par value because they believe in your company. Like they know that there's no actual guarantee they'll get this money back, but they think that they're gonna make money off of paying more than the par value for a stock. So kaya siya premium. This is the yes, it says here din pala. Amounts paid in excess of par value. So I think if I'm not mistaken, for no par value shares, when you buy a no par value share, all of it is all of that money goes to share premium since there is no par value. Okay. Then treasury stock is just outstanding stock backed by the issuing company from stockholders. So basically, when the company buys back the stocks, it won't be part anymore of the. Wait lang. Okay. What I remember is treasury stock. It's here since it's minus. It's a contra equity account, but I am trying to recall where the money gets deducted from because this is gonna be a debit. Like if you buy, I wait, it should be here. Here. Huh? Ah, okay. It just comes from the cash. Okay. So when treasury stock is bought, when issued stocks are bought back by the company, um, it's a debit for the treasury stock since it's contra equity, and then it's just paid for with cash. So actually, yung share premium and ordinary shares, hindi siya like nagagalaw. Nagagalaw. Um, hold on. I'm processing. Okay. So only when the stock is retired, magagalaw yung ordinary shares. Since ordinary shares nga is the par value. So basically, once a stock is issued, yung portion niya in the ordinary shares account will not be moved until that stock is retired. Kasi it's the par value of that stock, yung minimum. The premium is just the the trust, the trust of the investors. Okay. Anything else? Any other question for this, or should I move to a sample? Or I guess I might as well also mention retained earnings. So net income that a company retains in the business. Basically, this is just the equivalent for a corporation of what's it called? Owner's capital. Remember from first exam, revenue account is closed into the owner's capital. For corporations, revenue is closed into retained earnings. So retained earnings is also where the funds for issuing stocks. Issuing stocks. Yes. No, no, no. Wait, am I crazy? Let's see. Issuing shares. Okay, no. Huh? Okay, my bad. Not issuing stocks, but retained earnings is where the dividends come from. Yes, that's what I meant. Ay, so dapat, okay, I discussed retained earnings. Discuss ko na rin yung dividends. So dividends is the earnings of the owners of the company. So this is, yeah. It was in the table from before. Earnings from those who have equity in the company is called the dividends. So the steps to distributing dividends is to declare it, to record it, and then to pay. So even though record date does not have an entry in the journals, still important to know what this is. It's basically determines how much money the owners are gonna get. So in case na may complicated item in your LEs na uh, dividends were declared, but then between the declaration date and the payment date, ownership was changed. What matters is who owned the stocks on the record date, and then at that time, the amount that the owners will get, the payment that they will get won't change. Na. And then we have our ordinary and preference shares. So this is another uh, difference of you call it what differentiates them is how much trust they have in the company. So here, preference shares, you could say kinda that they don't trust the company as much because they want to be the ones to get dividends in case na there won't be enough retained earnings left for the ordinary shares to get their dividends. But the trade off for those with preference shares is usually they don't have voting rights or they don't have a say in the actual running of the company. And then those with ordinary shares do. So that's it for lecture 6. Let's look at the sample problems. Okay. At the beginning of the current year, Ash Company, I think yung Ash dito is dapat si Ashton. I think, ewan ko kay Sir Abe. Was organized with authorized share capital of 100,000 shares of 200 par value. During the current year, the entity had the following transactions affecting shareholders' equity. I won't read all that, but you can see it for yourself. Okay. First question is how many shares are outstanding at year end? Okay, so how many shares are outstanding at year end? So what you have to oh my god, I keep pressing the record button on accident. You have to remember is don't be fooled. When it says authorized share capital of 100,000 shares, that doesn't mean 100,000 shares were issued already. It just means it just means na they're allowed to issue 100,000 shares, but they haven't actually issued 100,000 already. So for the issuing, we're going to be basing it off of this. So actually, in the end, I'm going to read it din naman pala. January 10, issued 25,000 shares at 220 a share. Issued, oh my god, issued 1,000 shares for legal services when the fair value was 240 a share. Issued 5,000 shares for a tract of land when the fair value was 260 a share. So thankfully, binigay na diretso here the number of shares. They gave 25,000, 1,000, and 5,000. And there isn't any, wala namang sinabi na treasury stocks bought back. So to get this outstanding, you just add the 25,000, the 5,000, and the 1,000 to get 31,000. But like, if you say let's say they bought back treasury stocks, bought treasury stocks, um, like 1,000 treasury stocks. The answer here is gonna be, oops, 30,000 because yung 1,000 is no longer outstanding when it becomes a treasury stock. Okay. So why does it keep on hiding? Okay. Next is what amount should be reported as share premium at year end? So um, again, share premium is the amount paid for the stocks above par value. We know our par value here, 200. So in other words, share premium is just total amount spent on the shares minus the par value. So let's pull up this calculator. So during the current year, sorry, let's discuss it. So 25,000 at 220 a share. So 25,000 times 220 plus 1,000 times 240 a share plus 5,000 times 260 a share. And then, so that's all the amount of money that investors paid for, or yeah, investors paid for stocks. Then you subtract the par value of all of those, which is going to be 200 par value times. We established now there was 31,000. Answer is 840,000. Totoo ba? Yes. Next, assuming Ash Company earned net income of 1 million and declared and paid dividends of 200,000 in the same year, how much is the total equity to be reported? So first, if you want to get total equity, let's find out how much. Oh my god, dude. I'm gonna close this. Bakit si Eliza Fiona is calling? Wait lang, guys. Okay. So, back to where we were. Assuming Ash Company and net income 1 million, declared dividends of 200,000. Okay. And then let's just remove this minus 200 times 31,000 so that we have this amount that we have in the calculator right now is ordinary shares plus premium shares. Then let's add the 1 million income. But this dividends, since dividends are uh, debit, yes, because dividends are going to be taken from the retained earnings. Let's show this to dividends, then retained earnings. So then just subtract the 200,000. So your answer should just be 784, 7,840,000. Yay! That was easy enough, right, guys? And then, okay, last few items. Very cool. I opened up a ring sagot here. Okay, on December 31, Labor Company showed the following shareholders' equity. Share capital 100 par, 100,000 shares authorized, 50,000 shares issued, 5 million. Share premium. Okay, I won't read all that. I'm sorry. I'm getting dehydrated. Let's just read. On December 31, Zebra Company declared a cash dividend of 30 pesos per share to shareholders of record on January 15, 2023, and payable on January 31, 2023. So, prior journal entries for the following dates. So, December 31, 2022. This is the declaration date. You can see here also, January 15 is the record dating date. And then January 31 is the payment date. So, when you declare cash dividend of 30 per share, let's find out first how much is 30 per share. So we need to find our outstanding shares, which is interesting. Okay, so we have here 50,000 shares are issued, but we also know na there are 5,000 treasury shares. So really, the outstanding shares right now is just 50,000 minus 5,000. So you're gonna wanna do 50,000 times 5,000. Well, no, that's just 45,000 times the 30 per share. 1,350,000. This is the amount of dividends that are gonna be paid. So since the dividends are gonna be taken from the retained earnings, you debit the mali ba yung sorry, mali pala yung sinulat ko here. Because when you declare them first as a liability, becomes dividends payable. So you're gonna debit retained earnings. Since retained earnings is in your equity, to remove from it, you have to debit. Wow. And then you credit dividends payable by the same amount. The record date we established, no entry. And then on the payment date, it's just the dividends payable, they get paid. So the debit your liability for that and then just credit your cash when you pay your investors in cash. Next item, ilan na ba? Last two. And then tulog na tayo. Okay. The following information is available for Shibuya Corp. Yeah, that information. You got this. In 2023, the company recorded net earnings of 5 million and declared 10% stock dividends when the market value of the stock was 30 per share. Assuming there are no other transactions, determine the following. Retained earnings to be reported on December 31, 2023. So basically we already know our retained earnings here, 1 million. 1 million. Then we know they earned 5 million more. But we know also na some of that earnings is gonna be um moved from retained earnings to stocks. Okay, so we know na the answer here is not gonna be the full 6 million. So we need to find out first this 10% stock dividends. So what does it mean when they say 10% stock dividends? I think when I took this quiz, ginugol ko rin. So 10% stock dividends just means if you have a certain amount of stocks, you get 10% of those stocks more. So it's really like literal na the amount of stocks, not the amount that you paid, I believe. So first find out how many outstanding shares there are. 200,000 divided by 5 par value, since 200,000 is the ordinary shares account. 200,000, I don't need to use a calculator first, is 40,000 outstanding shares. So since 10% stock dividends, 10% stock dividends, 10% of this is just, oops, what 10% of this? 4,000. So, I don't know, overthink. Yeah, 4,000. So basically the implication of this is you're going to be issuing 4,000 stocks basically for free. Well, obviously not literally for free, but since we know the stocks are 30 per share, if you issue 4,000 stocks for free-ish, that's 4,000 times 30. That's 1 million, like, not 1 million, 120,000? No, 4,000. Yes, 120,000. Ika-calculator ko na nga lang. Just to be sure, guys. 120,000. So we know now we're going to be issuing 120,000 worth of stocks, but this 120,000 needs to come from somewhere, and it's not going to come from our investors because that would defeat the whole point of a stock dividend. So this dividend is still going to come from the retained earnings. So our original 6 million that we computed kanina for the retained earnings, going to be deducted by 120, 1, 2, 3. So that's 5,880,000. That's the retained earnings for December 31, 2023. Miss Universe 2013. Okay. Total equity to be reported on December 31, 2023. So the fun thing about this is stock dividends, since it's just transferring retained earnings to the stocks account. These are both part of equity. So stock dividends don't actually affect your total equity. So if we want to find our total equity to be reported, we just add together the retained earnings before stock dividends were given, plus the share premium and the ordinary shares. So that's just 6 million, 6 million plus 200,000, 200,000 of ordinary shares plus 500,000 of share premium. So just to reiterate, we kept it as 6 million because that is retained earnings and the stock dividends dealt out. And they are both an equity account. So let's just keep it together to make our lives easier. So you're going to get 6,700,000, which is the answer. Don't ask me why I got wrong there. Medyo naduling lang ako, guys. When the stock dividend was declared, the share premium account is credited by how much? Mag-overthink ako, guys. Zero ba to? Huh? Okay. Hold on, guys. Who wants to explain? 100. So the answer is 100,000. And then the share premium account for 100,000. Ah, okay. Easy lang pala yun. Okay, so since we gave them a total of what we gave out a total worth of 120,000 in stocks. But we have to decide where these are gonna go since we have two accounts for shares, ordinary and share premium. So just based on this 4,000, we get the par value of 5. 5 times 4,000 is 20,000. And then, so since 20,000 of this 120,000 is ordinary shares, the other half of it, or the other portion of it, 100K, is share premium. Sorry, guys. Had a brain fart. Okay. Last item. Levi Company provided the following information from a comparative statement of final financial position at year end. What is the number of outstanding shares in 2022? So guys, on God, di ako mali dito. Si Sir yung mali. Like he literally said in class. It's a correction. Okay, so we'll find out the number of outstanding shares in 2022. So share capital at 5 pesos par was worth 4 million, 2022, right? 4,500,000. And but then in 2022, there were 400,000 treasury shares. So what we're just gonna do is get this 4,500,000 over 5. So this 4,500,000 over 5 is gonna be our number of shares issued. But both outstanding and not outstanding. Then we're gonna subtract the 400,000 treasury shares and find that there are still 500,000 outstanding shares remaining. Tama talaga yan, guys. At December 31, 2023, Hachiko owns 90,000 shares. What percentage of the company does he own? So ownership is just shares owned over shares outstanding, because that's the amount of outstanding shares that you own, or the percent of outstanding shares that you own. Hold on, I gotta drink water. Okay, so treasury shares aren't counted in the ownership counting because, well, no one really owns them. Even if even if it's like inside the company, or actually lalo na because it's inside the company. And remember na for a corporation, um, it acts as its own economic entity. So treasury shares are owned by the corporation as an entity and not any person, not the owners, not the CEO or whatever. Kaya treasury shares or non-outstanding shares are not counted for ownership. So what we're just going to do is 90,000 shares over the outstanding for 2023. So we need to calculate that now also. So let's find the outstanding. Yeah. So outstanding is the issued for 2023, 7,500,000 all over 5 minus our treasury shares for 2023, just 600,000. So that's 900,000. 900,000 outstanding shares in total. So let's store that first. And then we have the own shares, 90,000 all over that 900,000 shares outstanding. That's zero point 0.1, which is just 10%. Yippee! What is the average price of the shares issued in 2023? So, Loki, don't remember how I solved this, but I think intuitive naman siya. So, price of the shares issued. So just remember that the price of a share is its par value plus its share premium. Since yun nga, the share premium is just the amount paid in excess of the par value. Let's do 7,500,000 plus, wow, 52 million. 1, 2, 3, 4, 5, 6. All over whatever this was, 7,500,000 over 5, which is the issued shares for 2023. So 39.6, which is 40 pesos. Huh? Guys. Nice. Issued in 2023. My bad. Not issued shares. So issued in 2023 means dapat sa 2023 talaga siya na issue. So we're going to have to subtract the price of shares issued in 2022. 7,500,000. Damn, this calculator emulator. 4,500,000. I sorry. 7,500,000 plus 52. 1, 2, 3, 4, 5, 6. Minus this, which is gonna be so basically this is this first term, well not first term, this first two is the total value of shares right now in 2023. Then we're gonna subtract it from the value of shares in 2022 so that we know what shares, so that we only have the value of shares in issued or added in 2023 palang. 2023 2023. Okay. Then we're also gonna have to know how many shares were issued in 2023. So it's gonna be 4,500,000. I sorry, let's start with 7,500,000 over 5. So that's the number of shares in 2023. Then divided by the number of shares in 2022. Ayun. So you're gonna get 25. Nagets ba? I typed a lot, but I think you guys got this. Oh, sorry, treasury stocks are excluded now when computing for stock dividends. Yes. Uh, yes. Because stock dividends, you pay people, you give people the stock, a certain percentage of the stocks that they own. As we said, kanina, treasury stocks. Why can't I talk anymore? Treasury stocks aren't owned by anyone, so they're not gonna be counted for stock dividends. Kasi sino yung mabibigyan? No one. No one. No one. Okay. How much is the total equity to be reported as of December 31, 2023? So we're just gonna add the share capital, the share premium, and the retained earnings. But we have to subtract the treasury shares because the treasury shares are a contra equity. Just remember that we have to subtract the treasury shares because when treasury shares are bought back, the accounts moved are just cash and treasury shares. So we have to account for the offset. No, what do you call it? Because the share capital and share premium. If we don't subtract the amount invested or the amount stored in treasury shares, it won't be representative of how much money people have in the company, which is basically what equity is. Medyo slight lang, guys. Okay, so let's just do all that. Just do 75 plus 52 plus 19.5 minus 7 times 1 million. Why does this just look right? 72 plus 52 plus 19 minus 7. Siguro tama ka lang. 13 mil. Hold on. Oh, shoot. What did I do? Help. I accidentally went back in the history. Okay. 7. Okay. Kasi 7.5 yan. 7.5 plus 52 plus 19.5 minus 7. 1 million. So that's going to be 72 million. Is that right? Yes, it is. I'm so relieved, guys. I mean, I totally knew that was correct. Okay. How much is the equity to be reported? 72 million. So if the company sells 100,000 treasury shares at 10 per share, what will be the loss to be reported? So if you want, we can go back to the thing here. That's an again. Treasury shares. Disposal of shares through sale or loss. So when treasury stocks are bought back by the public, not the company. Huh? Tama ba to? Eh? Okay, yeah, tama. So it's gonna be you credit the treasury stock, and then you debit how much cash you got for the purchase of the treasury stock, and then the share premium can either be a debit or a credit depending on basically tambalan siya. You know. So if the cash given was more than the worth of the treasury stock, the share premium is a credit. If and then vice versa. Yeah. So as you can see here, it's just share premium and treasury stock and cash. So actually the secret here, kaya nagkamali ako, is it's zero because there are no losses or gains reported on the selling of treasury shares. The ones that have gains or losses reported is first yung assets. Oh, for those who are not Abe, I guess kasama na rin yun sa inyo. Yung assets gain or loss on non-current assets. Something like that. And then retiring bonds, which is based on the present value at that, and then how much was paid for it. I believe. I believe. So that's it, guys. That's all the content I have for today. Does anyone have any other questions or problems they want to discuss? Want discussed? Unless gusto niyo mag-discuss, okay lang din. Before we end it all. Send a heart if you're ready to end it all. I hear my house is typing. What's no, we didn't discuss non-current assets. And like I'm not really ready to discuss it unless for the benefit of non-AIM classes may gustong mag-discuss. Go Hugh. Anyway, we appear to be all done. Hey, Nikki Opina is typing. Let's go, Nikki Opina. Oh, okay. Girl. Na-pressure ka ba? Can I send annotations? Like this one? Yung the one I did. You want to see this? Medyo messy, but okay. Pwede rin naman. Of non-current assets. Loki, I think it's just you and Daphne. Mag one-on-one na lang kaya. Wah! Okay. And your hearts if you're... Oh,
Hello.
okay. Yes, sure.
Oh yeah, for the survey, for the survey people, for the financial analysis, don't forget to study how to classify current assets, since the current ratio will be asked sa computation portion.
Yes.
Like PPEs are not current assets, so you don't add those. Yung mga ganun. Same with the debt ratio question. Don't forget to understand how to classify current and non-current liabilities. Yeah.
Okay, thank you, Trey. You're so current. 26E. Is that I oh sorry, it's here. Oh wait, I closed the 26E. It's zero. There's no gains or losses for shares. It's giving shares. Okay. Masaya na ba kayo? Let's all find our happiness in life. Let's send our hearts and end it all. Okay. Thank you for coming. Ay, yung may feedback form ba tayo?
Yes, wait lang. I will pull it up.
Yes. Don't leave until we send the feedback form. Let's also
Please answer
answer
it.
the feedback form.
I mean, I'm assuming some of you guys answer it naman consistently. It's the same link. So if you answer it consistently, then you have the link na. Or the question is, do they answer it consistently? Wait lang. Where do we even keep it? Halata talagang di ako competent na for
That's
this.
an awesome question.
Joke lang. I found it.
Okay. Wait, I'm gonna
I
stop the
found it.
stream. Oh my god, why is there no stop stream button? Oh, there it is. So thank you
Let me just
everyone.
check if I stopped the edit. What if I... Oh my god.
Yeah,
Halatang
it's
I
so
don't do
normal.
any of the manual work. I'm very sorry. Uh,
So, ayan, don't forget to answer. You can message me if you have any questions, if you still trust me after this session. Anyway,
Hello.
yun lang. Feel free to go.
Hello.
Kasi
Thank you
ayaw
guys.
ko maunang
Uh,
umalis.
Ayun.
Bye
See you
guys.
guys.
Diyos, gising ka ba?
Why did we fall asleep?
Sorry, I'm in here
Last
tomorrow.
last
I'm
time,
sorry.
right?
I'm so sorry. I'm not even taking the exam tomorrow.
Yeah, thank you.
Bye bye.
Tomorrow.
Bye.
Bye.
Yippee!
Adam Santos.
I think he's AFK, just keeping the recording on.
The
Anyway,
stream is just gonna go on for like 20 minutes after.
I think you can trim it naman
True, true. Okay.
since dulo lang. Also, how did it go? The parts time is goods naman.
The what?
Like
Oh, I
the
don't
whole
know when you
thing.
came in, but like, I think consistent. Like whatever you saw is representative of whatever happened. So
Okay,
like
that's great.
some oopsies because I am a STEM boy at heart. Like, you know.
Okay. Oh my god, accounting is so random and arbitrary kasi
Yeah.
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 That is Sunday me's problem. Tomorrow me's problem is a bit bigger.
I wish I
Anyway,
was a bit bigger. Okay. Bye guys. Oh my god,
okay, thank you.
it's in the stream. Okay.
Then Adam will
Bye.
cut it down.
Bye.
Thank
Bye.
you.
Bye.
Good night.
GG's. GG's.
Let's plan the big session once I have data na on whether or not the rooms will be free
Ah, okay.
and when we have a finals exam date.